Good morning and welcome to STA's Washington, D.C. Spring Update. I'm Jim Toes, President and CEO of STA, and on behalf of the STA Board and our affiliates and members in the U.S. and Canada, we thank you for your support by taking time to join us today. We're just going to jump right into it. It's a privilege to obviously introduce our first speaker, Congressman Patrick McHenry. Congressman McHenry is currently serving his ninth term as the representative of North Carolina's 10th Congressional District and is the ranking member on the House Financial Services Committee, one of the more important committees in Congress with jurisdiction over banks, public and private housing, urban development, securities and exchanges, and other financial services. Congressman McHenry is considered by many to be, among other things, to be a leader on crowdfunding, capital formation, and other forms of disruptive finance. And it's a pleasure to have him here with us this morning to kick off today's event. Welcome, Congressman.
Hey, good morning. Thanks, Jim.
All right, let's just jump right into it. All right, we've obviously have had a handful of major events that have occurred in 2021, and we'd like to maybe just kick off with maybe with Coinbase. Last week we saw Coinbase, a company that was founded in 2012, go public with a $50 billion market cap. Another example of a company accessing capital through the private markets in its early stages of life and only going public after it has matured. And when it did go public, it did so in a non-traditional way, that being a direct listing. So just give us some of your thoughts just around capital formation and the state of play around companies choosing a public route and when they are deciding to do so.
Look, until the surge in 2020 and this year, the U.S. has witnessed half the number of domestic IPOs that it had 20 years ago, half. And while at the same time, we've doubled the compliance cost of a business going public and being public. Look, one of the reasons I see is the reason for a decline in overall IPOs is the cost. Not just the cost of going public, but the cost of being public. And frankly, we got to make our public markets more attractive to generate more IPOs. And we shouldn't be making it more difficult to access capital through private markets as a way to compensate to push people to go to public markets. I think we should enhance both the markets, and I'm not really inclined to disadvantage one group in order to, as a consequence, advantage another group, if that makes sense. What I'm looking for is how we actually advantage, actually lighten the burden and advantage people into the public markets. And I think we need to have that broader thinking. The Coinbase example is very nice. They went public so quickly and had a nice debut. But that wasn't an IPO; it was a direct listing, and that's that was their choice. But we need to make sure that we have public markets that are the most liquid, the most deep liquid, and regulatorily feasible in the market and globally.
You've also done work in this area around just being able to enable investors to be able to access these markets when they're in the private stage of their growth. Can you just talk a little bit about what you've done around, accredited investor and the ability for investors who maybe yesterday could not be able to even, purchase these stocks, maybe they will be in the future?
Yeah, I think the accredited investor standard, I know Jay Clayton during his tenure at the SEC made some modest changes to the accredited investor standard, and that's a positive sign. I think we have to qualify more people into the accredited investor standard. Frankly, we know, that securities regulation is really the height of regulatory belief that people are too incompetent to make decisions for themselves. And that is much in the thinking of securities law. And so I want to make sure that markets are safe, obviously, that investors are protected. But we've got to make sure that we're enhancing these markets, both public and private, so that more people can participate and get the advantages of putting their capital to work. we see economic consequences of having a bifurcated market. And people talk about economic inequality. What you're talking about is really the fact that most people don't have the access to the private markets where there's the greatest economic upside, and that is disadvantaging average everyday investors. So we got to have a broader think about this, about our markets and people's ability to save and to invest, so we can actually have all boats rise.
That's great. Why don't we pivot to another event, obviously, that received an enormous amount of attention at the end of February and into March, and even to now. There was that's the Reddit GameStop situation. One Senate hearing, 2 House hearings, probably another House hearing down the road to come on this. Just general thoughts around it, but in particular, if you could maybe start backwards. I mean, do you anticipate any legislation coming from the hearings that have been held, and just your general thoughts around state of play in that one is also, and do you see any follow-up actions on the legislation front?
Well, look, this GameStop situation has shown Congress how much technology can change the way our capital markets function. And frankly, Reddit is not a new piece of technology, but people are using it to communicate. Frankly, hedge funds created algorithms that now try to find alpha based on what meme stocks are being discussed on Reddit, and that tells you kind of the pace of technology changing. Robinhood's lead in this past decade to zero commission trading has become now the industry standard, which is frankly open up investing to a much broader class of investors that have been historically left out of the market. So policymakers, I believe, we need to change our mindset, and mine has changed, but I think my colleagues need to change their mindset and start to ask, how's the next generation going to invest differently in this era of commission-free trading, and how they're going to interact with technology to do it. And I think we need to be thinking proactively. A number of my colleagues, though, on the Democrat side of the aisle in Congress, are trying to figure out legislative proposals to sort of heighten regulation around this and limit trading availability, and even to the point where they're saying that zero commission trading is a bad thing. There's been massive competition over the last 50 years once the SEC got out of the business of setting the cost of trades, and that I think, frankly, is a good thing. And now with the change of regime at the SEC, I think you're seeing the commission take a different direction than what we've seen over the last couple of years. And so I think there are more things we have to discuss there.
Okay. Yeah, and that's what we're hoping for too. I mean, obviously the hearings play a tremendous value with just trying to gather information and gather data around the event. And obviously we like to get the information first before we decide if there's a problem or anything or how to go about solving anything that may be wrong or needs to be improved.
Right, and that's logical. And what Congress should do is, measure twice and cut once. And I think that's a sensible approach in the real world. I haven't been on Capitol Hill so long that I've forgotten that, thankfully. But a lot of folks, walk around basically with a hammer, legislative hammer, and think that everything's a nail, right? And I don't think that's the right approach if I keep going with these analogies, but the carpentry analogies. But I think we got to be thoughtful in our approach for sure.
Yeah. No, we agree. Well, so you mentioned the SEC. I mean, we have a new chairman, Gary Gensler, coming in, and I mean, history has shown that SEC chairs spend their time doing one of three things, right? I wanted, finishing up stuff that was left on their plate, responding to whatever, new issue, unforeseen event that comes to be, And then the third part is obviously looking to, enact an agenda that they have. These three realities obviously require a combination of both substance and style. I mean, what are you hoping to see from the new chairman? And equally as important, I mean, how do you hope he kind of approaches his job?
Well, look, I think Chairman Gensler's acceptance of financial technology and cryptocurrency is a welcome change from what many Democrats want to avoid, which is the discussion of innovation, I think. And I think they want to avoid that conversation because many don't understand it. But in terms of financial technology and cryptocurrencies, I think this is a specific area where we should encourage the SEC to provide regulatory clarity, enhance collaboration, keep pace with the evolving marketplace, and enable capital formation here for these new technologies that are being deployed globally. My primary fear, though, is that congressional Democrats are going to push the SEC to stray from its mission, its three-part mission, and commandeer our principle-based securities disclosure regime, and fix non-economic issues or social problems. If the SEC shifts away from its historic mission, I think it's going to hurt American investors, disadvantage our capital markets, hurt small businesses that are trying to raise capital. Let's stay focused on the core mission. Let our politics be our politics. Let our social agenda be our social agenda. But we don't need to have that done through securities regulation or securities law. I think that would be a huge mistake. And frankly, the advantage to our capital markets is that we do have that rules-based regime. And the SEC has traditionally not picked winners or losers, winners and losers, or otherwise regulate sort of an ad hoc way. We've got a rules-based regime, and I think that's a positive, good thing. And so my hope is that Chairman Gensler doesn't engage in mission creep. And I sent a letter to him to that effect, to kind of stay focused on the core mission. Sent a letter to him on Monday to greet him on his first day in the office about the things that I think need to be focused on, and good governance issues like Ranking Member Toomey and I sent to the acting chair back in February. So I hope Chairman Gensler takes those things up, and I hope we can work in a bipartisan way.
We did see the letter that you and that I think it was you and Congressman Heisinger both sent over. You talked about on the legislative side, you have a hammer. The SEC does have a couple of more. Maybe they have a hammer and a screwdriver and a wrench, but they don't really have an infinite number of tools too, as far as looking to if they're looking to affect a policy change. But on the topic of, let's just stay with this just for a second again around the ESG and what we're kind of talking about here. What is the tools that they would be using that they have in front of them that would cause you that concern? Is it around the definition of what is material? Is it through exam priorities and regulation through enforcement? I mean, what tool are you most concerned about them using to kind of enact these policies?
You listed all of them. Materiality. I think the question of materiality, I think, is essential. That is a core definitional issue for the Securities and Exchange Commission. And we're seeing this a lot around ESG. Frankly, the world's largest carbon emitters already comply with climate disclosures. That doesn't mean that they emit less carbon or have less of a carbon footprint. It just means that they disclose this stuff. And so those that have a that materiality is already evident have these disclosures. And frankly, along the lines of social disclosures, funds are making these decisions. People are allocating capital according to that. And they're already making those choices. I don't think you have to have a broad-based set of disclosures put on the marketplace that are not material to the business at hand. So I think that is I think really big in my view. Enforcement stuff, I get that, but I mean, that's a concern. But enforcement through regulation is obviously a concern. But primarily the question of materiality is the one I'm most concerned with, because I think that can have just an expensive and harmful impact on the marketplace.
That's great. Okay, a final question is on FTTs, right? So this is obviously a topic that is important to our members. Any form of an FTT. I mean, this is certainly not a new topic, but rather something that is always on the threat meter. And we do appreciate, your stance on the topic now. But we did see something different in late 2020 and into this year, where FTTs were being discussed and debated at the state level. And now that's different. Obviously, we're dealing with national markets here. And can you just explain the legislative efforts that have been around this? What Congress can and can't do as far as telling states as far as what they can and cannot tax, and just FTTs at a national level as well. Some of your concerns around that.
Well, look, a financial transaction tax is harmful to savers, and Bernie Sanders just filed his version of a financial transaction tax, which advantages different components of the market, or disadvantages components of the market. And it's based off of his worldview or his preference for how people should save. So bonds have the lowest, right? And stocks have the highest financial transaction tax in his version of it. Which, I mean, how many are out touting the belief that people should advantage bonds, right? That should be the biggest part of their mix, which is basically what they're saying in tax policy. I think a financial transaction tax is a horrible, horrible thing. If you go back to that GameStop hearing, we heard Chairwoman Waters say she wants to consider financial transaction taxes. And Representative Tlaib explicitly pushed for a financial transaction tax as if that is going to solve a problem. That's kind of the absurdity of this. So as a result of that, I introduced a resolution emphasizing that Congress should impose a financial transaction tax that has this negative impact, and highlights the negative impact it would have on American investors, our market competitiveness, long-term savers. And so Representative Heising and I have reintroduced that as well. Now, additionally, we have national markets. And so this bill prohibits states from imposing the tax on trades by citizens outside of their state lines. And so you can't just tax an intermediary. And there's, I think, solid grounds legally for that prohibition against states and localities from imposing FTTs on citizens outside of their state or locality. And so at the federal level, you can't if a state wants to do a dumb thing, states are allowed to do dumb things. So I can't prohibit a state or locality from imposing that financial transaction tax on their own citizens. But legislatively and legally, we can stop them from doing this to folks, for instance, outside of New Jersey or New York, that will be harmed from this really seemingly small tax that is massive and negative and nasty. Yeah. So I think this is one where the partisan makeup of Congress shows that even the financial transaction tax 3-4 years ago was a Bernie Sanders, Elizabeth Warren proposal, and candidate Biden campaigned as part of his platform on a financial transaction tax. But at the same time, he said he would not raise taxes on those making under $400,000 a year. So you can't really make this thing work if you keep a pledge like that. And my hope is that he'll keep a pledge on not raising folks' taxes under $400,000. In fact, I don't want him to raise taxes at all. So.
Okay, great. Well, just one last question, yes or no. Are we going to be able to get into congressional offices this summer? I mean, you're going to be opening up soon, or what do you think as far as people, like, it'd be nice to have our next meeting be face-to-face versus over a Zoom.
And my hope is that happens. We've got sort of conflicting stuff, but yes, I believe that we'll have visitors later this summer. I believe that since vaccines are so widely available, and the way vaccines work is not that I'm protected because you have the vaccine. I'm protected because I have the vaccine. And I think there's a great deal of misunderstanding about the nature of that. So yes, I think we'll be able to get back to in-person later this summer.
Okay, great. Well, why don't we end it there? All right. Well, listen, Congressman, thank you so much for your time this morning. Good luck with the rest of your day. And for every